Kitco Mining special coverage of the Mining Investment Event of the North is brought to you by EMX Royalty Corp.
Peter Marrone is a legend in the mining sector. After completing a three-way deal with Pan American, Agnico Eagle, and Peter's Yamana Gold in 2022, valued at $4.8 billion, Peter Marrone leapt back into the mining game again. Peter set his focus on building Africa's next senior gold producer. The company is set to produce 390,000 ounces of gold in 2024. Here's my conversation with Peter Marrone at the Mining Investment Event of the North in Quebec City. Welcome back to
Thank
Kitco.
you. Happy to be back.
Tell us about Allied Gold. What is the work that's been done up to date, Peter?
So Allied, as a company, as a private company, has existed for several years. The acquisition of this portfolio of assets goes back to roughly 2019, 2020. We came into it in 2023 with the sale of Yamana, and I hope I can say it to you this way and to your viewers this way. I've never golfed in my life. I still don't intend to pick up a golf club. I had time and I thought, what can we do? And as I've shared with you before, I feel very privileged because the management of Yamana that is dislodged in that sale had said, we would like to do something and continue to stay together. Is there an opportunity to do that? We came across this opportunity with a private company with a private management that had assembled a portfolio of assets, and the skill set in managing a portfolio of assets and then optimizing it is different than actually assembling that portfolio. And so we saw that as an excellent opportunity to do two things. One is become the management and take it public, which we've now done as of September last year. And the other is invest ourselves. Not just invest our time as a management, but invest our money. So that $260 million that was raised last year, that's 260 US, 40 million of that came from us. And that was important. We wanted to distinguish ourselves from many of the people that are in our industry, where they are managers, professional managers, but not also investors.
Peter, talk a little bit more about the skill set that you've taken from Yamana with your team and then you've brought over to Allied Gold, because looking in your investor presentation, I think the word was stabilize and optimize operations. What type of value are you bringing to the assets you're bringing into this?
So perhaps by example, we can create what is the theme or what's the message. The optimization of a plant, how we can get more productivity, more recovery, less reagent, digitization, instrumentation. If something is being done manually, there's a result. If something has instrumentation, there's a different result. Better monitoring, analytics. Then at the mine, the same applies there. Many operations in Africa, certainly these operations, are run by mine contractors. So the mining is done by a contractor. The level of efficiency with that mine contractor, the quality of our short-term mine plans, where we're mining, are we capturing the grade and the tonnage that we expect to capture, the efficiency of that, and making sure that we are properly setting out the key performance drivers for that mine contractor. Blasting, and the interplay of blasting and then mucking and then the hauling of ore to plant. So to give a simple example, if we have the inefficiency of a loading place where we've been mining, where there are 3 or 4 trucks that are waiting to be loaded, how do we make that more efficient? Because that goes straight to the bottom line of productivity. We can get more ounces of production, but we can also get those ounces of production at better cost.
Peter, also you have plans to grow Allied Gold as well. Scale matters.
Scale does matter.
Yeah.
It will sound contradictory, but we sold Yamana last year. I think the context is important. We didn't set out to sell the company. We set out to determine what was the best way to optimize value. So if we look at the information that we put into market on that sale, the information circular, we said we looked at what we could buy, where we could merge, and if we were to sell, what would be the optimal situation for sale. And it became very apparent to us that size matters more than it ever has. I think quality always matters, but the size of a company matters. We were a 1 million ounce per year producer, and we had a path to get to 1,500,000 ounces. And that still made us somewhat small. Things have become bigger. If we look at some of the technology companies, the entire market capitalization of our entire precious metals mining industry is roughly 1/7, 1/8, maybe 1/10 the size of one of the large technology companies. So the bottom line is that size does matter more today than it has in the past. What's the contradiction? Well, Allied is actually smaller than what Yamana was. But Yamana began with 84,000 ounces of production from one mine, and we were able to take it to more than 1 million ounces of production in that roughly 2 decades. I think we can do something similar here, but we're starting with one mining complex of 2 mines in Côte d'Ivoire and one mine in Mali that produce roughly 400,000 ounces per year, and we're increasing that to 800,000 ounces. So we're already starting from a much larger platform. And with the skill set on optimization, improvement operations, building new mines, increasing the quality and capacity of a plant, but also that skill set on the M&A side, I'd like to take this to a company that is far larger than Yamana, and I'd like to do it in a time frame that is a fraction of the 20 years that we did with Yamana.
West Africa has had some geopolitical challenges, I can say. Countries have faced some recent coups. It's been a harder place. How are you managing that investment? How are you modeling that risk?
Well, I find it fascinating that even in countries where there are transitional government as a result of coups d'etats, I find it fascinating that there's still a willingness on the part of the people in the country to ultimately go to a form of self-government, to a form of rule where there is a democracy. I find it interesting that the rule of law is still respected in many of these places, and just as interesting, from an economic point of view, a commercial point of view, that mining is such an important part to the GDP of these countries that they know that there is something to be said for making sure that they continue to allow for the development of mining enterprises. Let's look at Côte d'Ivoire just as an example, though. Côte d'Ivoire had a civil war to the north, maybe a decade ago, 8 to 10 years ago, and today it's booming. I was there in April last year and again in October last year, and what I found fascinating about it is that in that span of time, roads had been paved. There were Audi and Mercedes dealerships that were going up. People were going out to bars and restaurants, and they were dressed in designer fashions. What that tells us is that the economy is doing better. Maybe it's booming. And what I find interesting from a governmental point of view is when ministers say, we want private investment because that's how we make our economy grow. That's how we take people who are in poverty out of poverty. That's how we create a middle class. Isn't that what we've done in the Western world? And they're emulating that model. So in the end, I take geopolitics sanguinely with a bit of a grain of salt because I think things change. And geopolitics exists everywhere. I'm sure that there are those in this country, in Canada, that are saying a government that just increased the capital gains tax, does that make a lot of sense? So the geopolitics is something that I think we should take with a grain of salt. And the final comment that I would make is, look at it from the lens of how do you deliver quality returns? Geopolitics is a factor. Canada is more stable than some of the parts of West Africa. Undoubtedly, that is true. That may not be true for those parts of West Africa in the future. But if it takes me a long time to get permitted here, and a fraction of that time to get permitted in West Africa, then that goes into the mix when we calculate returns.
Gold has hit several all-time highs this year, Peter. Silver, I believe, is up about a third year to date, yet mining equities are lagging right now. I looked at the GDX, it's June 4th today. I see that the GDX is up only 11% right now. How come we're seeing lagging mining equity prices with these great gold prices, Peter?
Boy, what a great question. And the foundation of any answer I can give to that is give it a bit of time. Starting point is the amount of investment dollars that are available today is a lot less than what was there a decade or maybe a dozen years ago. Not the industry, but the investor base has become substantially smaller with less capital to deploy to mining and to precious metals mining in particular. But I look at it from this point of view. In 2020, at the height of the pandemic, gold price before the end of that year went to above $2,000 per ounce. I think it was in the range of $2,030 per ounce. Up until this recent run-up in gold price has hovered in that range of $1,900 to $2,000, maybe $2,050 per ounce. So in the span of that 2020 to 2023, Gold price has held comparatively flat, but what's happened to margins? And the margins have gone from about $750 to $575 in that period of time. So what I mean by give it time is we've just seen the run up in gold price. That run up in gold price is quite dramatic, and I think it will continue. And now as an industry, as companies in that industry, we'll be able to demonstrate that we can deliver improvements to margins, increase in EBITDA, an increase in cash flow. And that's where the rubber hits the road, because at that point, I think that's where the multiples begin to come back. And even though the investment dollar in the specialist funds is less, there's a lot of money out there that is looking for investment and is looking for a value proposition. And I think that the precious metals industry, and Allied in particular, represents an impressive value proposition.
I want to talk about mergers and acquisitions, Peter. We've seen the high gold prices, but I think another wind at the back of what's happening with the miners is some really sizable M&A deals right now. This is the June 4th week, as I said. We saw that the BHP and Anglo didn't quite get done, but there's been some $100 million deals that have gone through the past. I'm thinking about Alamos, I'm thinking of Casino, for instance, as well too. Are we finally starting to see some type of consolidation right now in the mining sector?
Again, a great question, and I wish I had the definitive answer. I've been an advocate of consolidation for decades, and I have not seen it to the extent that I thought that I would. Are there consolidation opportunities? I think the answer is yes. Does that mean that some of the larger companies that are in our industry should consolidate? Probably not. But I think that in the mid-space, and that's why I find where we are with Allied very appealing, in the mid-cap space, I think that there's a huge opportunity for consolidation. Take Africa. You asked about Africa before. There are scores of companies that are single asset companies producing 150,000 ounces to 250,000 ounces per year. In my view, it would make a lot of sense to consolidate that and to create an African or an emerging market stalwart. So I think there will be some of those transactions, and my hope is that our shareholders will give us the mandate to be able to say, you've earned the right to be able to go out there and consolidate that part of the industry at least.
Peter, when I'm talking to mining CEOs, there's three key problems, there's three key issues that always come up. People, you talked about people before though, and being able to bring over your team from Yamana. It can be dealing with inflation issues that we talked to, and also can be the water issue right now.
So let's begin with people. Yes, there is a shortage of high quality people, and those that are of high quality, many of them are a lot older, and we're not replacing that with a younger cohort. But what I find interesting is that may be true in many parts of the Western world, but in many respects it's not true in emerging markets. If we look at many places in South America, in Africa, in Eastern Europe, we are graduating geologists, we are graduating mining engineers, but they need training. And so the way that I'm looking at it is I think that there's an excellent opportunity here, and that's why my bet is more in emerging markets than it is in developed markets. That skill set, that mentorship of the developed markets, that older cohort, will provide excellent training to some of that new generation in these emerging markets, where there are people of a young generation that are saying, I think mining is something that I want to be in. And we're encouraging that.
Lastly, Peter, milestones over the next 12 months at Allied.
So stabilize operations, I think we've done that. Continue to demonstrate optimizations, we've done that. First quarter, second quarter are stable, ordinary course. We have a whopping increase in production in third and fourth quarter as a result of some development work that we're doing in some higher grade areas at our mines. So that should be something that's very important and critical to investors, which is within the third quarter and fourth quarter, this bump up in production that gets us closer to that 400,000 ounces per year from last year's 343,000 ounces. I think another one is exploration. We've got a $32 million exploration budget. For a company our size, that's stellar. And we want to demonstrate, as we did last year, that we can replenish what we mine. We replenished 190% of what we depleted last year. And I think we'll be able to do that again this year, because there's literally gold everywhere. Spend the exploration dollars. And the advancement of this project in Ethiopia, Kurmuk Kurmuk is, in my view, one of the better projects. Let's define what world-class is, but an asset that can produce for 15, 20 years, based on what we currently know of resources and reserves and its geological potential, that number is likely going to increase, that can produce 290,000 ounces per year at all-in sustaining costs of below $950 per ounce. That's the margin that we generate. That is a whopper of an asset. To me, it's a world-class asset. By the end of this year, we will have demonstrated that we have that well on the path to development and to start operations in the second quarter of 2026. And we're so confident in that we're planning a mine tour so that investors and analysts and others can see the operation and what we've done to date sometime later this year, likely in November or December.
Peter, thanks for keeping helming mining operations so we can keep interviewing you.
Thank you. I'm happy to be here.
My name is Michael McRae here at the Mining Investment of the North for Kitco Mining.
Kitco Mining special coverage of the Mining Investment Event of the North is brought to you by EMX Royalty Corp.